Let's take a look at the oil market as we near the end of the year. OPEC Plus is set to meet apparently tomorrow to discuss production targets. There's speculation that the producer group may decide to defer rolling off cuts maybe for 3 months. Let's get more from Amrita Sen, founder and director of research and energy aspects. It's great to have you here in person.
Thank you. Yeah. So we finally meet in person.
Yes, that's right. You're based in London, but you're here meeting clients.
Yes, that's right.
So OPEC Plus, are their options limited? I mean, would it be very difficult for them to increase production?
I do think so, given this is usually the time, Q1 into kind of early Q2, refineries go down for maintenance. You always see crude stock builds, and OPEC don't want to add barrels to a building market anyways, right? So they are likely to delay the unwind, we think, by about 3 months or so. And that just gives us, or gives them really the leeway, because that way they've effectively gotten rid of the builds, which usually happen in the first half, then draws start in the second half of the year, and then they can bring back the barrels.
And what is the global inventory position, roughly?
Global inventories are actually incredibly low. Like in the US, we will be ending the year below 420 million barrels on the Gulf Coast, which is really unheard of. Cushing inventories are going to be the lowest since 2007. You wouldn't think that, right? Looking at oil prices,
No.
we've just come off $2 right now as well. Partly because everybody's expecting a bearish 2025. Everybody's got very big bills in their numbers, so they're discounting the current inventory levels and saying, oh, things are going to get worse in the future, so let's just get oil prices down.
With the price of oil low, I know it managed to get its head above $70
Sure.
briefly yesterday, but it has been a disappointment. Is there any risk of a serious breakdown in OPEC Plus? Would some people think, the heck with it, I'm just going to pump more?
No, I think the one thing I keep highlighting to our clients as well is that April 2020, if you remember when there was this price war and, prices then, of course, with COVID went down to negative, it's still very fresh in everybody's minds when I speak with OPEC ministers. They don't want a repeat of that. What they want is stable prices. Of course, do they think prices should probably be a little bit higher, maybe $10 higher? Yes. But they also know if they don't manage the market, prices could be $20 lower, right? So they're basically optimizing revenues on a regular basis. And I think that's kind of what's happening right now.
As you know, the Trans Mountain Pipeline is now shipping quite a bit of Canadian oil to overseas markets. I know a lot of it's still going to the States. Has that been a huge development, though, the startup of that expansion?
For sure. I mean, of course, for Canadian producers, because you've seen Canadian prices or differentials kind of narrow, right? Or the discounts narrow, I should say. China loves this oil. Whenever we speak to Chinese refiners, they say it's a stable quality oil. It's flowing. So I think that's going to continue to remain the case. I think there's a huge appetite for Canadian oil in Asia. So the more pipelines, the better.
That's interesting, yeah. So the Chinese, the quality of the Canadian heavy oil meets their needs.
Absolutely, because they have their new modern refineries. They need a lot of heavy crude oil. In fact, next year, we are closing down quite a few refineries, including on the Gulf Coast. Some of that takes Canadian oil. But even with that, all the new refineries coming online, net number is about 800,000 barrels per day. Every single one of them is medium or heavy sour crude refineries.
These are new refineries in Asia, for example?
Mostly Asia. There's one in Mexico. We're not, I wouldn't put money on that one. But the Asian ones, yes, absolutely. It's China, India, a couple of other Southeast Asian countries, all sour crude. Like they need the heavy barrels.
And is it partly in the OECD or Europe or North America, it's just hard to get a refinery built because of local objections and regulations?
Oh, I mean, forget new refineries built. I think now we are closing down. So we have 1 million barrels per day of closures next year.
Wow.
400 in Europe, 400 in the US, because everyone keeps calling doomsday on oil demand, even though demand keeps growing.
Yes.
So there's no way, especially with all the environmental concerns, no new refinery is going to get built in an OECD.
I know. Well, you can't even build a housing development
in OECD,
without the NIMBYs kicking in. Yeah. Leave us with a final thought then. Next year, do you see oil prices moving steadily higher?
We actually do think, I mean, the average price might be similar to this year, about $80 for Brent.
Okay.
But I think we do think the risk is to the upside, because the things to watch out for, I'll say Iran. Trump is going to really go maximum pressure on Iran. We could lose 1 million barrels per day from there. Potentially also on Venezuela, sanctions there. Tightening sanctions on Russia. I think those three can really tighten up the market. You're starting to see green shoots in China. So all of that coming together, and because people are so bearish, positioned that way, we could really see that flip.
Yeah,